My name is Captain Price, and you are here with Smart Money Trades. Make sure to follow me on StockTwits if you haven't already. The stock that we are going to be talking about today is a stock that I think can go parabolic in the very near future. What is this stock? It's DraftKings. Now, the first point I want to make is if you look back to the first COVID-19 lockdown, DraftKings was around $10, and then throughout the lockdown, it just kept going up. It went up over 330% to over $40. Then it consolidated for a few months, and then it spiked back up to $64. Not back up for the first time, actually. It spiked up to $64, and then it descended, but it descended at the same price it was consolidating at, making a double bottom on the 1-year chart at $35. As you can see, before October of 2020, it was at $35. Then it spiked when October came, and then it descended, but it hit its bottom in the 1-year chart, and now it's on its ascent again. And if you're one of those people who are worried that you missed the run-up already, it didn't even start yet. This is going to be 60 by the end of next week and 80 a couple weeks after that. I mean, do your own due diligence before placing any trades, but I am extremely bullish on this. The big boys are on the bullish side of things. They're not holding this down to manipulate options. They're the ones buying the options. They're the ones that are bullish on this. The street just announced a $100 price target. Loop Capital specifically announced this $100 price target on DraftKings, which signals over 100% gains before the year ends. And why is this happening? Why is this happening? Just as COVID-19 cases are spiking, just as lockdowns might start happening again. Why is this happening? Why is it going up? Well, one, like I said, it hit its double bottom. But why did it hit its double bottom? Why did it decide to go back up now? Because when there's a COVID-19 lockdown across the country, we have to stay home. Now, what about sports? Is sports shut down? No, sports isn't shut down. I mean, let me show you what I'm talking about. NFL COVID. All NFL teams to operate in COVID-19 intensive protocol starting Wednesday. Meaning, just like with football, I bet all the other sports are doing it too. They have strict policies to make sure everyone is as safe as possible and the sports continue. But where is everyone outside of sports? They're home watching it on their TV. And what are they going to want to do? They're going to want to place bets on DraftKings. And this is going to bring in revenue for DraftKings. Why are they going to want to do that? Because they're bored and they have nothing else to do. Give them stimulus money on top of that, and that's why you see over 330% gain during the first lockdown. But we don't even need a stimulus now because revenue was so great. Revenue was so great, as you see on the second bullet point. It beat expectations for 2 quarters in a row. It was expected to bring in $69 million for quarter 2, and it brought in $71 million. It was expected to bring in $131 million for quarter 3, and it brought in $133 million. That's $2 million more in both scenarios than what it was expected. Now, that might not seem like a lot, but those were optimistic forecasts for DraftKings, and by beating those expectations, it just proves the point that this baby is just being born. Why is it just being born? Because sports betting isn't even legal yet across the whole nation, and right now the market cap is $59 billion. DraftKings has a market cap of $18.68 billion. That's like 30% of the whole market cap for sports betting. They own 30%. That's a huge chunk. They are the kings of this industry. They are the leaders of this industry. And the more states that legalize sports betting, the higher this market cap is going to go. It's expected to be at $92.9 billion in 2023. So, and honestly, I think they're going to grow. They're going to take an even larger percentage of the market cap. Why? Because DraftKings is just, I mean, it's on every freaking commercial that I see. They spend tons of money right now with advertisements, but soon they're not going to need to do that as much because everyone's going to know about DraftKings. And once you make one bet on the app, and I'm telling you from firsthand experience, you're gonna want to come back. You're gonna want to place bets on the next game. You just want to get better. It's less gambling and more strategic and rewarding if you do your research. And just like stocks, if you do your research on your players and you pick the right players, you could do well and make money. And what DraftKings did to get around the whole illegalized sports betting right now in most of the country is they made lineups, and you pick your lineups, which isn't betting on sports. You're just making a lineup, and the person or the player that has the most points in their lineup, and you get points by having players in your lineup do well in the game. The person who has the most points wins the money. So there you're not actually betting on the game itself, like betting on what the score is or who's going to win or lose. You're just betting on individual. Um, you're just betting on like a point series, like a lineup points point. You're betting on your lineups, but not sports specifically. And when sports betting gets legalized across all of America, everyone will be able to download DraftKings Sportsbook, which directly bets on the games itself, like the final scores and who's going to win. And once that happens, the revenue, I mean, the money going in is going to go up a lot. It's going to go up a lot. Also, like I said, DraftKings has hit its double bottom in the 1 year chart at $35, and a spike is imminent. If you look at the top stories of the day, it has the juice. It has the juice. People on Wall Street think it's gonna double. One thing that I noticed that was interesting, I was doing research today. Analysis says DraftKings trades at a big premium to other growth stocks. Okay. First of all, the sports betting industry is a lot larger of an industry than most other industries. Second off, DraftKings is the leader of that industry. Most other growth stocks aren't the leader of their industries. And third thing I want to say is right now we're trading under our all-time high. So get out of there with that BS. We got, as you see right here, bada bing, bada boom. DraftKings gets new $100 price target with strong market share. Exactly. And I said all this. Listen, I said all this on 11/14/2020. Before all these articles came out to the web, I was telling people to get in. I was giving them the reasons. But unfortunately, in this world, people only believe what they see online, like by like official sources. But smart money trades, Captain Price, we know what we're talking about. And if you took my advice before the whole world read those articles of $100 price targets and the stock shot, you could have got in at a lower price, and you could be riding this wave right now. But it's not too late to get in. Like I said, it's not too late to get in. This baby is coiled up. It's gonna shoot, baby. It's gonna shoot. It's gonna be $80 in a few weeks, $60 by next week, and $100 eventually. But as always, do your own due diligence before placing any trades, as I am not a financial advisor. And yeah, that's pretty much it. Rest in peace, King Von.